Okay, so today we'll be talking about liquidity. Yeah, this session is meant for liquidity. Putting all this together is going to give us optimum trading style known as SLP concept. Yeah, and that concept is going to give you a range of trading where you can be able to make up to from 10 to 15% per day whenever you want to trade. So let's go into it quickly because we are already late for the session. So what is liquidity? So if I ask you what is your understanding of liquidity, anyone want to try? Okay, so if I'm asking people what their definition of liquidity is,
Liquidity means money now.
money.
It's saying that if you are liquid, now are you liquid? That means do you have money?
Wow.
Like I say, it's liquidity about money.
Okay, nice. The definition you gave is still the typical definition a smart money trader will give about liquidity. Okay. So if I still ask, I know if I still ask more, you still come up with more ideas and more gets. But most people I ask about this most people really they give me definition that are still related to money, smart money concept. Get except for a definition where liquidity is others. Yeah. So everything is literally correct. Liquidity as a money is correct. Yes. Liquidity as whatsoever they call it like as orders or money is still correct. But the main liquidity is orders. So when I say liquidity is order, we are talking about what orders. What orders are we talking about here? So let's go straight into it. So when you go to the supermarket, you provide value by giving them money, right? And we all know liquidity is money. So what you are doing in the supermarket to get that item, you are injecting money into the store. You are injecting money into the store so you can get those items. So I ask you guys, how is money being injected to the market? Or, okay, let me rephrase it. Let me rephrase the question and put it in more simpler term. I know if I put it in more simpler term, the question will be more easier for you to grasp. Unfortunately, it is difficult for us to think in that direction, to think how money is injected into the market.
It's simple now. By placing orders now,
Okay,
by
by
being in a
placing
position.
order, that's a good one. That's a good idea. You're correct there. So you say by placing order. So how do you place order in the market? For instance, you go to what? Your MT4. Yes. What type of orders do you place in your MT4?
We have to buy or sell orders.
Buy or sell orders. Okay. Any other one? Is that the only one we have? Is that the only orders we have?
That's the only one I can say for now.
Okay, that's the only one you can skip for now. Okay, so we have buy orders, sell orders, which are market execution. We have pending orders, which are your buy stop, your sell stop, your buy limit, and also your sell limit. Don't you use buy stop? Of course. Yes, you can use buy stop. Don't you use sell stop? Yeah. I know some other people, even if you ask them, they will tell you they set take profit and they set stop loss. Yes. Those people will still tell you they set take profit and they set stop loss. Imagine some people still say liquidity is stop loss. Stop loss. So you can see what is going on there. All right. So so rather than all this um so rather than all this your buy limit, sell limit, such as this buy limit, sell limit, market execution, stop loss, take profit. Yes. Rather than all of this, is there any other way you put your money into the market? So everything else here except for take profit is how you inject money into the market. So it's how you provide liquidity into the market. You can see it has nothing to do with equal lows or highs or relative high or low. It doesn't have anything to do with that. Because liquidity is money. Just as one of us mentioned. Yeah. Money is value. So how do you inject money into the market? It is through the orders. So the orders are represented such as pending orders. Pending orders, yeah. Pending orders. Market execution. Stop loss. Take profit is not part of how you inject money in the market. You are taking liquidity away. So you are not providing it when it comes to take profit. So your job is that you behave like a thief in the market. Let me say your job is that of a thief. Your job in the market is that of a thief because you are thinking out of the box. And what you do daily basis is that of a thief. Your job is to identify where majority of the people trading the market have their orders. Then you wait for that orders to be taken. And when it is taken, you now join that transaction. Otherwise, you will be the liquidity. Is it making any sense?
Yes, 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 yes. No.
That's why you hear the popular saying, if you can't find the liquidity, you are the liquidity. If you can't find the liquidity in the market, then you are the liquidity. How weird is that? At some point, when I started liquidity, I was thinking, damn, how would I have thought that everything about liquidity is right in my MT4? I just open my MT4 and everything is there. Let's say you have market structure which are made up of transactions. Market structure which are made up of transactions. we have market structure like this, and these are transaction. So we have higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So in none of this, you will agree with me that I have one transaction here. I have one transaction here. I have two transactions here. I have three transactions here. I have four transactions here. I have five transactions here. 6, 7, 8, and 9. We all agree now that all of these are not just structural push as much as they are push. They are also transaction. Now let us look at this guy properly. Stop loss. Let's start with the stop loss. You as a trader in the market, when you pick a trade looking at all of these transactions we highlighted here, where will you put your stop loss? You put your stop loss where? Below the low, right? That's where you put your stop loss. So we agreed there's liquidity here. I hope we are together, everybody.
We're together.
All right. Now we know with this, we know liquidity is always sitting on every high, every lows in the market. We just need to start putting in proper structure. Make this understanding better. So we know if you are taking a trade, your stop loss here, your stop loss here, your stop loss here, your stop loss here. That is how it works. What about pending orders? Pending orders are for breakout traders and reversal traders. Traders that are looking at breaking out their orders. Breakout traders around here. Okay. And reversal traders. They put their pending order like buy stop here. The reversal trader put their pending order like sell and buy limit here. Can get that right. Okay. That means we know where the liquidity is and the stop loss sit in those high and those lows. So stop loss are sitting on these lows for people that are buying, on this low for people that are buying, on this low for people that are buying, on this low for people that are... Stop loss is sitting on this, on a particular high. Stop loss is sitting on this high, on this high, on this high. For people that are selling, stop loss is sitting on this high. So out of this pending orders, market execution, stop loss, and the rest, we also have, there's one we also have here that I didn't mention. We have what we call break even. Okay. Out of these four, pending orders, market execution, stop loss, and break even. Let me remove the take profit because take profit is not supposed to be part of it. Buy limit and sell limit is still the same thing as pending orders. So the most important, the two most important here is stop loss and break even.
How about buy stop and sell stop?
Yeah, you are correct. Buy stop and sell stop should be here. They are still part of buy stop and sell stop. They are still part of the pending orders, right? That's it. They are part of the pending orders. Let us get. So we have pending orders, we have market execution, stop loss, and break even. So the two most important is the stop loss and break even. These are the two way money is being taken away from you in the market. Once price hits the stop loss, oh shit, you lose the trade or you lost money instantly. Once price hits the break even, shit, you are losing that trade for real, or you are losing money if possible, except you secured your a lot of profits before it hits that your break even. Those are the two most important that guides the orders. Now we have execution orders. Yeah. As a trader in the market, where do you more than likely place your execution order? If you look at this now, you know this is how you most trader typically place their order. Most are looking to market execute their trade in structural points. They are looking to market execute their trading in structural points like this. And they buy from you. This is it making sense? So you wait within structural points, such as POI, after a break of structure, then you wait for a test. That is how most people take their orders. True or false? True or true? I know it's true, so let's just go ahead with it. So the way we fashion our execution orders in this market now is going to tell us how we are going to make use of our break-even. When most people are what? Literally market executing, then you know we have the break-even as a liquidity in this area. Can you break even on a trade that has not been executed? Definitely not. So once your trade has been executed and is in a profit, what do you tend to do? You break even, right? Of course. That's all. That is something we ought to do when we are in a good trade. And we all execute our trade in structural points, just like this. So most often, you tend to break even within that structural level where you execute your trade. Such as this, you break even here. So when you break even, you have just added liquidity to the market. That's what you did. Market comes down here and take your what? Your break even, your liquidity, and goes higher. I hope it's just making sense. So now, this can really become complex. Anyway, you start to ask, where can the pending orders be? Where can the stop loss? Where can this be? Where can that be? The buy stop and the stop loss. And this is a lot of task for many people. In fact, some people can even use what some people can call it magic indicators that gives them everything. They tell them everything. But we won't be doing that. So I've looked into delivery of liquidity. In fact, if you are trading liquidity, you don't need to know all the liquidity in market. all you need to understand is just 3 liquidity points. Then the others are going to naturally be shown to you when you understand those 3 liquidity points. So to enable you to identify them easily, you have to know these 3 liquidity points, and it will make you to trade the market consistently. So the 3 of them goes like this. The first type of liquidity is transactional liquidity. Is the transactional liquidity. That's our first type of liquidity. Transactional liquidity. Transactional liquidity is the liquidity for correction. The second type of liquidity is structural liquidity, which is popularly known. When I remember when I showed you guys some stuff. We call it the last high before the main high and the last low before the main low. Isn't it? And this liquidity is liquidity for what? For continuation. This and this this structural liquidity is that liquidity for what? Continuation. This is continuation. Liquidity for continuation. Liquidity for what? Correction. That's our transactional liquidity. Then we have the inducement liquidity, and this is the liquidity for expansion. This is liquidity for expansion. Or liquidity for expansion, yeah. That is the liquidity that often gives you MSU. So are we together?
Yeah, we're together.
Now I look at the market. Pay close attention to time frame analysis as part of this. I look at the market and my 1 hour structure, for example, my 1 hour structure, for example. 3 time frame are important in your trading. The H1, the H1, then you move to the M5, then you move to the M1. For the H1, your job is using the trading plan, which we are going to come up with, is to identify where you are in the market you are currently on. So you are using what? You are using H1. For the H1, Your job is using it first to identify where you are currently in the market. Where you are. The H1 is there for you to understand where you are in the market. Sometimes when you relate the H1 with the 15 minutes, you get similar connection. That is, if the H1 isn't clear, you can use the what? 15 minutes to get more clarity. Also, you can relate the H1 with the H4 when the H1 is too noisy. So you can see the connection now. H1 15 minutes, H1 H4. So once you know where you are in the market, the next part of your trading plan is what? The next plan of your trading plan is the what? Once you identify where you are in the market. So we have the where, the what, and the how. Hope you are writing this down. Are you writing it down? We have the where, the what, and the how. So where you are, what, and how. So so we said the first one where you are in the market, which I just explained. That is where you are in the liquidity cycle. For instance, the higher time frame, which revolves around the H1, M15, and H4. Then the second one is what do you see in the M5? What you see in the M5? The M5. Is there anything you are trying to identify, looking for in the market in terms of MSU and EPA? If there's anything like that you are looking for, such as MSU and EPA, you are looking for it on the M5 time frame, which is the what. Then the last one is how. The last one is the how. How do you intend getting into the trade? That is the 1 minute. Then after all these three things have been properly followed, the last but not least is the target. Is to target the next liquidity level to the best of your understanding. Because you are going to have to identify the liquidity level. You can also see based on your own understanding and how it works. You have to put in so much confidence when you are reaching out or going to your higher time frame to get your targets. The most important thing is remaining consistently profitable. So here now you see you have higher high, higher low, higher high, higher low, higher high. You can see this in any form at all. You can tell where liquidity is right based on what you have treated. Yeah, you can say where liquidity is. Yeah. Transactional liquidity is the liquidity for correction. The moment price break this high here, it means price took out the liquidity. We know this is an uptrend. We know an uptrend has been established here, and which is the most important thing. You have to understand the trend first. So the trend is uptrend. So the liquidity here is taken. Once the liquidity here is taken, we expect a correction. Whenever transactional liquidity is taken, we are expecting a correction. So this is our transactional liquidity. Whenever transactional liquidity is taken, we expect a correction to the downside. Transactional liquidity taken, we expect a correction. So it means we have been able to account for this transaction. This transaction, this transaction, this transaction, and this. We have been able to account for all those transactions. And the one likely to happen even here, we have been able to account for it. But we have been able to, sorry, let me come up, I'm not going too far. We have been able to account for this transaction here. For this transaction here. This transaction here, which is whenever price broke this high, we are responsible, we are being able to account for this transaction. We can also account for this transaction when this high is broken. When this high is broken, we can also account for this transaction here. That is our transactional liquidity when the high here is broken. But then what happened if what transaction is responsible for this move here? What liquidity is responsible for it? This is our structural liquidity. This one here, we call it structural liquidity. Liquidity for continuation. Liquidity for continuation. So now if we look at this here, we are going to see this black. Let me explain this black properly. Okay. Now if we look here, we are going to see the black. For example, can be the higher time frame, which is the 1 hour, for example, and the 5 minutes will come in as internal, just as internal like this. This is the 5 minutes internal structure. So we have something like this: higher high, higher low, higher high, higher low, higher high. Okay. So now if you have something like this and you mark all this as most traders do, and price comes, let me see, for instance, you have this. Yeah. Now if you have something like this and you mark all this and price come all the way down, because this is how many traders, and they see this break of structure, then they wait for retest to this area. You're more than likely to enter the trade on this retest. So you have this low, you have a low here, you see this is it here, this is, you have something like this from this low. Let me draw it very well. You have a low here, you have another low, you have a low here, and you have another low here. You have this low here. So this low here is what we call the low before the main low, and this is the last low before the main low. So you are likely to enter a trade. When you are likely to enter a trade here, and your trade goes into profit, what do? You break even, right? So once you break even, all of a sudden, price starts coming down. What it does, you'll be thinking price is just coming to gain efficiency. Then it's going to start going back up. But what it does is it's likely coming to the last low before the main low. Yeah. And this is where the structural liquidity is seated. So you grab your last low before the main low, grab your break even, then it goes back into profit. It go back into your direction. These things happen a lot in the market. So you don't always have to wait for last low before the main low in some scenario. Just like this. Price came down here, it took your last low before the main low, and it went up. This is a typical example of a structural, what is it called? Structural liquidity. Yeah. But in this scenario now, price did not come to the last low before the main low. So that's why I say you don't always have to wait for last low before the main low. You just have to monitor price. We say no MSU, no trade. Is that not what we said? So even with having structural liquidity is not enough for you to jump into any trade. It is just a level for you to pay attention to. And once there is an MSU following through, that is where you have your trade. Does it make sense? So in this scenario here, price did not come to your structural liquidity. But as long as price is efficient and you have MSU, look at MSU here, you can take your buy trade. And even if price comes to your structural liquidity, you still look for your MSU to take your trade. Yeah. There are some times that you take your trade without MSU on your structural liquidity. This time is going to come. So is price efficient here? We say yes. We say price is efficient. Do you have price is efficient here? Do you have price is efficient here? Do you have an MSU? Yes. So I will definitely buy it. Remember, liquidity is seated in every highs and every lows in the market. That means that there was liquidity on this low. But if we start jumping to every small time frame, we won't have a very well structured plan to take our trades. That's why you need to know where you are in higher time frame liquidity cycle of the higher time frames. You need to always understand where we are, and those are part of the topic we are going to talk about, liquidity cycle properly. And once you know where you are, you can align it with the lower time frame properly. So if we look at this, we say, where am I? Where am I in the liquidity cycle? Yeah, I would say I'm at my SLQ. Of the higher time frame, which is your structural liquidity. So first thing I look for is, okay, where am I in the liquidity cycle? First of all, I'm looking at, okay, I'm at the SLQ. Yeah. Then what did I see? What did I see? I need to know if I see anything efficiency in 5 minutes. This is like a 1 hour time frame. This is 1 hour. Then when price come into your 1 hour structural liquidity, you want to check your 5 minutes if you have an efficiency. That is the what. Then how do you intend to get into this trade when market gets to your structural liquidity? How do you intend to get to the trade? Perhaps there is an 1 minute liquidity grab. 1 minute liquidity grab below there. Yeah, which is your MSU. That's how you get into the trade finally. I want you guys to take note of, so you can pinpoint have your question set up. So when we are having our trading plan, you can ask me a lot of questions. So then once you are able to get, this is your structural liquidity point here. This is your 1 hour time frame. When price comes into your structural liquidity, that is your way. You can identify that this is a 1 hour liquidity structural point. Yeah, structural liquidity. So when you get into your 5 minutes, you should be able to see what? The 5 minute efficiency. 5 minute efficiency. Then the how is what? You are looking for your liquidity graph, which is your MSU. Once you have your MSU, you are good to enter this trade. Then what is your target? Clearly, your target is coming from your H1 liquidity grab. The target will more than likely be the H1 liquidity level. If we are in uptrend like this, then your H1 liquidity level should be the next liquidity. There is huge possibility that price is going to take out the next transactional liquidity so that your price can deliver as your target. Your target should be here. However, I'm going to monitor if you have something like this here, like a structural liquidity here, so you should be monitoring that, which we call the main high before the main the last high before the main high. In case price wants to do anything for me. And this is where I usually edge my trade more, that I can sell from here. When I'm buying from here, I can also sell from here if I see any opportunity. So transactional liquidity. Hope you guys are understanding now. We have transactional, we have structural. So we'll be treating just these two for this class, transactional and structural. We'll be having another class for other liquidity structure. For these two now, as explained, the transactional aspect of liquidity. Transactional structure, this is your transactional liquidity, and you're responsible for correction. Another transactional liquidity. But before you have continuation, is what happened here. Before you have your continuation, the continuation moves this way and leave you for this last low before the main low. This is your structural liquidity. And how do you get trade from this structural liquidity? When price comes to your structural liquidity, you go to your M5 to look for what we call EPA, your efficient pricing. We already talked about efficient pricing, so you need to go back and look for the record so you can understand better. When you get an efficient pricing, efficient market pricing here, then you go to your what? Your M1. Your M1 to look for your MSU. MSU on your M1. Then you can now finally have the trade to the upside. These are high quality setup. I'm explaining for you. So you will be having trading plan. So trading plan is where we put everything we have been learning together. but this is still the intermediate part of the training. We are still growing. We still have a lot to cover to be able to put everything together. So it's advisable for us to get practice. You go to your charts and look for this liquidity. You look for efficient pricing. You look for your EPA. You look for your MSU, and you see how these guys are working related to your transactional liquidity and your structural liquidity. So even on the transactional liquidity, when you have a transactional liquidity, what makes this price come down? What will make this price come down is what? Is your MSU. When you have an MSU here, yes, price will fall down. Especially when you have inefficient price action. Price become efficient on your 5 minutes, then you now have an MSU. Price will definitely come down. These are rules that you need to understand why market moves the way it moves. Yeah. So I appreciate you guys for today evening class. We'll be shutting down the class now, and we'll be continuing our class tomorrow for continuation of liquidity. Okay. So thank you very much, guys. Have a lovely night.
Thank you. Good night, sir.
All right. Good night.